Welcome to the midweek edition of Business Morning. 55 minutes of current and relevant business conversations. That's what we have in store for you. I'm Ini Jodmekwa, and we start as usual from the oil space. Prices rose over 1% today, and that's extending gains from the previous session as hostilities in the Middle East erupted anew, and talks between Tehran and Washington is showing little progress at this time. So we've seen gains on Brent, more than 2% gain. Yesterday, we were about 93, 94. This morning, it's over 97. For WTI, it's also more than 2% in the green, 2.24% at $95.86. And both benchmarks settled at a one-week high in the previous session. U.S. Central Command said that on Tuesday that it had defeated multiple Iranian ballistic missiles and drones and launched defensive strikes following attempted attacks by Iran, signaling an escalation in the Middle East tensions. Iran launched ballistic missiles towards regional neighbors, Kuwait and Bahrain, but failed to hit target. And the U.S. military said that American forces have conducted strikes on Iran's Qasem Island in response to that. So not a very good picture we're seeing right there. And of course, it shows right here with the green color, showing there's an escalation of the war. Back here in Nigeria, we see that the Debt Management Office has opened the June 2026 FGN Savings Bond subscription. They're offering Nigerians returns of up to 14.77% per annum, and that's up from 14.52% in May's issuance. The subscription window runs from June the 1st to June the 5th, 2026, with settlement set for June 10th, giving retail investors access to low-risk government-backed securities, and is aimed at boosting savings and financial inclusion. The offer features two instruments. It's a 2-year bond that matures June 10, 2028, and that's at 13.77% interest, and a 3-year bond that matures June 10, 2029. The rate for that is 14.77%. The bonds are priced at 1,000 naira per unit, with a minimum subscription of 5,000 naira and a maximum of 50 million naira. Interest is paid quarterly, while principal is repaid at maturity. And Nigeria's credit access index has improved, moving from minus 10.8 to minus 9.2. And this suggests a gradual return of lender confidence. It's according to Credit Direct. The firm says that the shift reflects early signs of stabilization in the credit market, with lenders becoming slightly more willing to extend credit. However, the index remains in negative territory, indicating that borrowing conditions are still tight. Credit Direct adds that economic pressures and risk concerns continue to weigh on lending decisions across the financial sector. The report concludes that while sentiment is improving, full recovery in credit access is yet to be achieved. The World Bank Group Guarantee Platform, housed at the Multilateral Investment Guarantee Agency, MIGA, it aims to more than double its annual issuance of guarantees in Africa to $6.4 billion by 2030, and this to improve the lives of around 190 million people over the next 4 years. Africa's working age population is projected to grow by 740 million over the next 3 decades, with up to 12 million young people entering the labor force annually. Guarantees will play a critical role in attracting private capital into job-rich sectors, including agribusiness, energy, and infrastructure. There's also healthcare, digital finance, and trade, creating jobs and supporting Africa's ambitions to become a global engine of growth. New guarantees issued over the next 4 years are expected to mobilize $23 billion in private capital for Africa via a multitude of impactful initiatives on the continent. These include AgriConnect, which is a World Bank initiative to transform smallholder farming, create jobs, and strengthen global food security. They also include Mission 300, an initiative by the World Bank Group and African Development Bank, supported by Rockefeller Foundation, Global Energy Alliance for People and Planet, and Sustainable Energy for All to connect 300 million people in Africa to electricity by 2030, while helping create more jobs. And so at the just concluded AFDB General Meeting that was in Brazzaville, one of the outcomes of that has been that the continent has remained resilient. However, there are some risks. Let's discuss this now with the Chief Economist of the African Development Bank, Professor Kevin Urama. Prof, good morning. Welcome to the program.
Good morning, my sister.
Yeah, Prof, you guys had fun last week without me. That wasn't fair.
Yeah, we missed you.
So please share with us, what are some of those highlights of the economic outlook from the meeting?
Thank you very much. As you already said, this year we focused on the African Economic Outlook report, focusing on mobilizing Africa's development financing at scale in a fragmented world. Now, that point of a fragmented world is because we've seen a lot of multipolarization in global governance. We have seen trade fragmentation, supply chain disruptions, global and geopolitical crises, which is actually changing the way capital flows in the world. And the interesting finding of the report is that Africa's real GDP growth continues to do well, despite all the current Middle East crisis, but also the previous global shocks that we have faced during financial crisis, COVID, the oil price shocks, and all the other shocks that we've had. Africa has continued to do well. The real GDP growth rate in 2025 is estimated at 4.4%, and even after factoring in the impacts of the Middle East crisis, the continent will still maintain between 4.0 to 4.2%, depending on how long the crisis lasts. If it's 3 months, we will be at 4%. If it is more than 6 months, we will be at 4%. And the growth was broad-based in the sense that 36 African countries improved, with 7 of them reaching very high levels of growth as well. I'll come to the figures you have there with regard to domestic revenue mobilization, which is the major point of what we have. Now, but one major finding on growth trends is that even though we're doing well on real GDP growth rates, our GDP per capita growth rates are not growing at par with our GDP growth rate. And for that reason, we don't have enough structural transformation, we don't have enough jobs for youths, and inequality remains very high on the continent, with a Gini coefficient of about 38.5%. And we find that the top 10% of Africa's population holds about almost 60% of Africa's wealth. So that creates poverty and insecurities and all these things that we see going around on the continent. And that's a major point that we need to focus on in terms of policy reforms. Now, but debt has also remained a problem, taking away resources from investments in productive capital accumulation on the continent. And one of the things we see there that was a bit surprising is that increasing borrowing on the continent for some countries actually reduces labor productivity and reduces total factor productivity, which means that the quality of debt is not that good. And we need to think about what we borrow, how we borrow, and what we use what we borrow for, so that the resources that are being borrowed in the name of citizens are able to yield dividends for the continent.
All right, Prof, we'd just like for you to jump to those slides that you saw earlier, about the tax and the revenue.
Okay, so when we come to the tax and revenue, the figures that you showed tells a good story. One, that the nominal rates of tax collection and revenue, domestic revenue mobilization on the continent is improving, but again, just like in the case of debt, tax productivity is not high enough, meaning that the tax to GDP ratio is going down even when the total nominal tax collection is going up. Reasons for this are diverse, one of which one of which is the social contract between citizens and governments on the continent. It's very weak, and citizens don't believe that taxes are being used to deliver on public services. So by improving that social contract with citizens, we estimate that the continent can raise even more taxes without increasing the tax rate, because citizens will voluntarily be able to pay taxes, and we can be able to raise over 760 billion US dollars just by adopting best practices without increasing tax rates. But again, we see that if you looked at non-tax revenue, which is the next slide that you have there, if you look at non-tax revenue, it's the same story. While tax revenue can give us an additional 469 billion US dollars, non-tax revenue can give us more than 311 billion dollars if only we are able to improve that social contract with citizens and allow citizens to be more confident that public services are being delivered, and reduce implicit tax, meaning that people are not going to be providing their own electricity, building their own roads, and providing their own security while still paying taxes. So the figure you showed there is telling about the issue now with regard to the informal sector, which is very high on the continent. So if you look at this figure you have here, is telling us that direct taxes are not doing so well on the continent because of the reason I have given. So, but indirect taxes, things like VAT, is mobilizing quite a lot for the continent and can still mobilize quite a lot on the continent. If you go to the next slide, it speaks to informality, the fact that we can mobilize an additional 125 billion US dollars by just addressing informality on the continent. And if you look at this graph, country by country, you see how countries are doing with regard to the level of informality. And the rate of informality in the countries is also an indication of the confidence that citizens have about the formal sector in terms of how governments are using public resources to deliver public services. So generally, we see that the continent has a lot in terms of domestic resources that can be mobilized only if we improved macroeconomic policy governance, improved institutions and rule of law, and improved compliance by improving the social contract with citizens.
All right, so Prof, how do we sustain this resilience? Because one thing that jumps out of the reports when I went through it, at least the much I could, is resilience. We say that the continent is showing signs of resilience, even though there are threats, and there are potentials to do even better. How do we sustain or even build more and have a better, resilient economy on the continent, especially amidst the geopolitical crisis?
Yes, that's the main purpose for this report, because we find that the sources of volatility in Africa's growth figures is because of external dependence. When we depend on external financing, which necessarily is depending on how the external financiers feel, then we're not in control of our own development. So that is why we focused on how to mobilize domestic capital, because if you are investing your own resources, you will be able to invest in a more systematic and continued way. First, let me also mention one of the drivers of resilience on the continent is just the sheer nature of the African economies, where we have a diversified economy, different structures of the economy, and so on. And commodity price rebounds. Whenever there's crisis, the prices, markets stabilize and prices come back. And because we sell mostly commodities, countries come back. But that is not because we're focusing on strengthening capital accumulation through broad-based structural policy reform. And the good thing is that in the past 5 years, we have seen a lot of structural reforms across countries, and this needs to be maintained. The third point that we need to do in order to sustain resilience is to build this social capital with citizens, the social contract with citizens, so that citizens are able in order to pay taxes. And that figure you are showing there is basically telling us that most citizens on the continent are willing to participate in governance by paying taxes if government simply simplify the tax policy, has an efficient tax administration, and delivers on public services, but also seeing prudent use of fiscal resources of countries so that they are not being asked to tighten their belt while maybe government officials are not tightening their belt, but then also strengthening accountability and transparency in our budgeting system, in our public finance management system. All of these things will build the resilience in domestic revenue mobilization, allowing us to leverage more revenue to be able to do development with our own resources, not depending on ODA or FDI or all those external flows, which we see is declining, and with the fragmentation of the global economy may continue to decline. The other aspect of strengthening resilience is attracting the private sector. And by attracting the private sector, the simple thing we found in the report is that by improving, strengthening and creating predictability in the regulatory frameworks of countries, the macroeconomic policy environment, the business environment, the private sector will naturally come. Another aspect of that is providing a pipeline of bankable projects that they can invest in, because on the continent we have our institutional investors that hold about $4 trillion in assets under management, but only 2.7% of this is being invested because there are no bankable projects, and also because of risk perception due to the macroeconomic policy environment. Our high net worth individuals on the continent holds about $2.5 trillion. Again, we can leverage all these resources better in order to do development in our own terms, not depending on foreign capital coming on the continent. But then we have talked about the diaspora before. Last year, the diasporans released about $104.6 billion for consumption smoothing, that is called remittances. But if we create the structures, the systems, and the financial architecture that allows them to invest in productive investments, then this can rise to up to $1.1 trillion by 2050. So basically, the answer to your question is, it is in our hands. Let's improve the macroeconomic policy environment that can attract capital at scale, retain capital at scale, and effectively utilize capital in productive investments. Right. Then the second thing we need to do is to improve the social contract with citizens. And finally, before I stop, the president of the African Development Bank Group has already done the job for the continent in introducing the new financing architecture for development in Africa, NAFAD. And simply by implementing that NAFAD and also implementing the African Monetary Institute and the African Financing Stability Mechanism, which we have discussed before, the continent will be able to deal with its debt challenges. It will be able to deal with mobilizing and utilizing capital at scale. It will also be able to deal with investing properly and curating projects so that we can have those bankable projects that we have been speaking about. There's quite a lot in the report, which I will encourage viewers to read, because nitty-gritties on what each country needs to do. And I think we are at the cusp of taking hold of our own agency for development, which was the purpose of the report.
Yeah, Prof, thank you so much for that. But better than that, we do hope to see AFDB, as you said, the president has initiated some steps. But to see the AFDB working closely with government on the continent to actually, build on these factors that the AFDB have noted or has noted, and then, to actually see it happen or affect the welfare of the people. So going beyond macro to micro now, because we've been seeing some good macro data, but we're waiting for the micro. But thank you so much, Prof, for your time on the program. And you wanted to say something?
Yeah, thank you very much. For me, the next thing to do is to implement.
Yeah, exactly.
We know what we need to do. We know the challenges are, what the challenges are, and we have the solutions. The institutions, the architecture is there. Let's just implement.
Exactly, Prof. Thank you so much. Chief Economist of AFDB, Professor Kevin Urama. Let's take a break now. When we come back, we'll be talking about CSR by OPay. They have some money for Scholars Program. We'll have the details in a bit. Stay with us. life is not all about doing business. Corporate social responsibility, that's what OPE is discussing this morning with us. And they've tagged it OPE Scholars Program 2026. And they want to help us understand the 10-year commitment to education. And right here in the studio, we have the head of partnerships at OPE, Mr. Ipenwosa Odiase. Good morning and welcome to the program. You prefer to be called IK. Yeah, well, that's Ipenwosa. Yes. And then we also have Itoro Udo. Itoro Udo is the Corporate Social Responsibility Manager for OPE. So you're welcome to the program, gentlemen.
Thank you for having us.
Yeah, so you have OPE's 1.2 billion naira, emphasis on that. It's a 10-year scholarship program. What is OPE trying to do with this? How far do you intend for it to reach?
Yeah, thank you very much for that question. And at OPE, we took a decision to invest in education of young Nigerians, and we came up with the 1.2 billion 10 years scholarship program, partnering several institutions in Nigeria. As at today, we partnered 24 tertiary institutions as at last year, and that has gone very far and wide and gone very well, and the feedback has been quite impressive. And we are not stopping there, and that is why we came up with the OPE Scholars Program. As we moved across the 6 geopolitical zones of Nigeria, because the scholarship cut across the 6 geopolitical zones in Nigeria, we got another feedback that is not just enough to provide monies for the young ones, for the students. We need to go way beyond that, and that is why we came up with the OPE Scholars Program, where we now have the National Innovation Challenge to provide further opportunities for the students around mentorship, career opportunities, trainings that will help them become better even after life after school. You know.
But how this 10-year? What period is that? You said it's a 10-year program.
Years, yeah,
so from what year to what year?
Yeah, so it started last year. So from last year,
from 2025 to 2035.
Yes, please.
Oh, okay.
Yes.
So it will help us to understand how this works. He says it's preparing the students beyond the classroom, and these days we know that certificates can only take you this far, you know. So when you say you're going beyond the classrooms, what exactly does that mean? How exactly do you get this instilled, the knowledge, the exposure? How do you instill this into the students themselves beyond the institutions?
Okay, thank you very much. So I'd like to just start from, you use the word beyond. And we are also known for that word, beyond banking. So since we are beyond banking, we're taking it beyond the four walls of the classroom.
Nice one.
You'll pay me for that. Okay, now coming back to the question, like I would also want to ride on his wings to say, now we had started this initiative in 2025. We had it was very insightful, very impactful. And we know that supporting students, undergraduates, goes just beyond the tuition, goes beyond grants, goes beyond scholarship. Now, we already identified, I mean, a few weeks ago, the internet went, abuzz, on fire, when we heard that there is a huge shortage of talent in the country. So while some school of thought would, ordinarily want to tilt towards that angle, we are saying if there is a gap, we are here to, sort of bridge that gap and see how we can make things better. Now, this year's scholarship program it's an evolution of what started, in 2025, or as it was launched, to say let's have 3 different trajectory paths. And we are doing this in partnership with Google. Now, I'm about to say, I was expecting I would say a smile on your face.
Why?
Because we're in partnership with Google. No, it's a global brand, tech leaders, we all know. And
I thought you were in partnership with channels. Then you would see a smile on my face.
Oh, we're also in partnership with channels.
Okay.
That's why you're millions of viewers out there are able to watch all of this and get all of this information.
Now I can smile.
Okay, so we're in partnership with Google, and then we have the scholarship, which is just one of the 3 major trajectory paths, and then we have the innovation challenge, which you had also rightly talked about. That's where Google come into play with us in this program. And what will be happening there, we have the innovation challenge, where we have students, undergraduates from around the country who begin to develop tech-driven solutions to address critical needs, critical pinpoint areas around the country. Now, you could also say that, oh, it's just going to be a locally developed solution. But if you look at it holistically, you begin to understand that many businesses you see today actually started from trying to solve something locally, and then it goes global. So at the long run, we are about to see that even these undergraduates will be exposed to a global audience, giving them lifelong opportunities to become people. And that's where another trajectory comes into play, which is the O Futures. Now, with the O Futures, we are not just giving them the scholarship award, putting them through innovation challenge, or putting them through a tech boot camp. We're also providing a career pathway for them to say, okay, let us now identify the best of brains that have gone through the innovation challenge, and let's see how we can create a career path. And then we see how these undergraduates become entrepreneurs, become thought leaders.
So OPE is going along with them all through
all
this
the way. So it's a whole journey entirely.
So I guess this is where the 1-point-something billion goes to, empowering them, helping them to set up and all of that. Is that correct?
You are absolutely not far from the truth.
All right. So I think there's also the introduction of OPE features. Is that it?
Yes. And that's where it comes to say, okay, what happens? Now, we also understand that I'd like to, because I'm really itching to drop this. So we also understand that we, in Nigeria, we have so many talented undergraduates, so many talented youth, and the amount of talent we have in Nigeria today does not actually tally with the number of opportunities we have out there. That is where the OPE Futures comes in. Let's see how we can begin to play as a disruptive player in, sort of trying to shake that imbalance and use that disruptiveness to create opportunities for these young talents.
Okay, want to tell us more about that disruption?
Yeah, well, so it's a 3-in-1, we call it Trinity. So, I mean...
Father, Son, and Holy Spirit.
Yeah. So the 1.2 billion allows the students to stay in school, to be empowered, to pay their fees, to take care of their tuition. The innovation challenge makes them build ideas, build solutions for our everyday through technology in partnership with Google, as earlier mentioned. And the OPE Futures now give them the opportunity for life after school. So it's a complete basket, we're looking at, not end to end. Make them stay in school, give them education, give them opportunities to build solutions and ideas and prepare for life after school, even while in school. Then when they come out, prepare them on how to career opportunities, entrepreneurship, and a successful life after school. And with that, of course, we are creating future leaders, future entrepreneurs who will come and shape the affairs of the country.
All right, so when you said shape the affairs of the country, obviously we know that when you talk about innovation and ICT, that's what is involved now, AI. So I guess that all of this has a lot to do with ICT and AI, yes?
Definitely, and of course, like we mentioned, and that is where the tech giant Google came in. We have similar shared beliefs. Google is a big brand, like we all know, and that is where they come in to expose these young ones, these students, to global technology solutions, global innovations, of course, AI inclusive, and this gives idea to build world-class solutions, solve problems, be it education, around education, transportation, agriculture, even financial inclusion, and with the kind of innovation that we get from this program in partnership with Google, we believe the sky is the limit for everyone.
So how can people be part of it?
Okay, rather, how would undergraduates be part of it?
Okay, how would undergraduates be part of it?
Because if I say people, then you might also want to jump.
Then I might also want to jump part of it. Okay, undergraduates.
So for undergraduates and viewers out there, for you to be able to be a part of this innovation challenge, just jump on your internet-enabled device, www.opeweb.com. www.opayWeb.com/innovation-challenge.
Okay, could you say that again slowly? Because, I mean, that would be a bit complicated.
Okay.
Yeah.
www.opayWeb.com/innovation-challenge. Just hit that up in your address bar, and it will surely take you to that destination for you to begin to log up and apply for the Innovation Challenge.
So what does the application process look like? How long does it take? What are some of the requirements, so that the undergraduates can know before they even start?
Yes, some of the, like the word undergraduates, they need to be undergraduates of a tertiary institution in Nigeria.
It doesn't matter if it's public or private?
It doesn't matter. That's why we are calling the OPay Scholars Program an International Innovation Challenge. So we are not restricting it to either private or public tertiary institutions. Now, they also need to apply as a team. You stand a better chance of making it to the grand finale should you apply as a team of not more than 5.
Not more than five. So do they have to be from maybe the same faculty, or what should they have in common to form a team?
Now, the 5 of them or 4 of them must all come from the same tertiary institution.
That's all that matters.
Yeah, we cannot have them from school A and school B to make up a team of 5. No, everybody must come from school A. Regardless your faculty, regardless your department, just come from that school.
So what should they be preparing for? Is it that they're going to create a product or create, a service line, a platform? What should they be preparing for?
They should be prepared. They should prepare their minds to jump on how to use AI tools. So using AI tools to develop tech-driven solutions. One of it will be the Gemini, which every undergraduate will know the Gemini app by Google. So that is something that they would have to be conversant with, because it's one of the bases of which they'll be able to, make it further as the Innovation Challenge and as the project or the program progresses.
And this is not man no man.
Nah.
Because we had a youth forum recently, and the youths are worried that a lot of times they want to go for something, and the issue of who do you know comes up. And then that is a deterrent to some of them. So that's not applied here.
No, it's not. That's what we have.
Yeah, no, definitely. I mean, that's the 1.2 billion 10 years scholarship, which is already running. Of course, the feedback is clear. It's not a situation of unknown man. It's a situation of those who really need the support, and we worked in partnership with the school. So in this instance, of course, there's going to be a detailed selection process, and like you mentioned, all what they need to do is to go in there, apply the relevant team, and do the needful, and of course the stringent selection process. All
right, parting words, gentlemen.
Parting words. The sky is just the beginning of what every undergraduate can achieve in Nigeria. Do not be held aback by what you face right now. I mean, we all have stories to tell. We can do it. We are the future leaders, and it starts now.
Okay.
Yeah, and at OPay, we remain committed to investing in the future of our youth, the future of young Nigerians. We believe they are the next leaders of tomorrow, as we know, and this is just the best we can do to see that we begin to promote entrepreneurship, begin to promote a good technology culture to change the landscape of our environment.
So they don't have to come out of school and start looking for jobs. They can create jobs by themselves. Yeah. All right, thank you so much, Jessica Osa, for joining us on the program. That's the partnership manager, I believe, head of partnership at OPay. Thank you so much. Itoro Udo is a corporate social responsibility manager at OPay. Thank you so much for coming on the program and for the message that you have brought.
Thank you so much. Thank you.
All right, now let's head to the CBN, the Central Bank of Nigeria. Was it 2 days ago? They launched the Payment System Vision 2028. And they say at the heart of it is securing the payment ecosystem in Nigeria. It's PSV 2028. We have the director now, Director of Payment System Policy Department at the CBN, joining us, Mr. Musa Jimo. Mr. Jimo, good morning and welcome to the program. So tell us about this PSV, what it's about, what's the essence of it?
is a 3-year roadmap articulating what we intend to do with regard to expanding the payment system and making it more resilient. We had the launch on Monday, and we had 5 thematic areas of concentration that we really want to deepen. And these areas were well crafted because we had a study from last year, August, a deeper study on what we have done in the last 20-25 years with regard to all the previous payment system vision. And we're able to articulate the areas that needs to be refined, the areas that needs to be expanded, and the new areas that we need to bring to bear based on technology changes and new technologies. So that was what led to the crafting of the Payment System Vision 2028.
That the implementation will be in phases. What's phase 1 about? When does it start? What can we expect to see in the first phase?
Okay, so like I said just now, there are 5 thematic areas. Those are areas that we want to work on. The first one is infrastructure expansion and creating interoperability, meaning that we want to expand the technology, the banking facilities that allow transactions to flow very well without disruptions, without failure, without disputes. And we also want to make sure that our systems are interconnected, not just in Nigeria, but with other global communities. Those are the ones that will focus in the first year of implementation. It's a 3-year roadmap. We'd like to do that quickly because as more transactions grow, you want to have an infrastructure that can accommodate those transactions. Otherwise, you'll be having incidences of transaction failure. The second one also would have to focus on financial literacy and financial education. People need to know their rights. People need to understand the benefits of financial services and particularly payment services. And we also want to deepen financial inclusion by making sure that areas in the country where you don't have digital financial services are extended to them at a minimal cost while still bearing the controls that should be built around them to avoid cyber threats. Thirdly, we also want to expand our financial services across the country and beyond Nigeria. I say this because many Nigerians would like to pay for goods and services outside of this country when they are importing goods with their naira. Today, you have to look for the hard, scarce FX before you are able to do that. We want a situation, we want to provide a payment trail that integrates with other African countries where we have an inter-regional trade to pay with naira. Very easy, so you don't have to look for FX. And by doing that, you eliminate a lot of cost, thereby bringing down the cost of goods and services in this country. So cross-border economic transaction is also very important for us in this PSV. And lastly, we'd like to, having all of these, you have to provide a lot of protection around the payment infrastructure. So cybersecurity and risk management is a major consideration in this Payment System Vision 2025. And all of these we intend to implement within the 3 years that we have laid out. So first year, we'll look at all of these and begin to break down into work groups that will look at different streams of problems that we have outlined and begin to solve them. Where we need to correct some with regulatory intervention, with policies, we do. Where we need to build infrastructure, we work with the stakeholders that are responsible for this to expand the infrastructure. For example, we talked about expanding the telecommunication infrastructure and, if possible, prioritizing financial services such that anytime you pull out your phone, you pull out your laptop, you pull out your system to conduct financial services, it goes through smoothly without any glitch. These are the interagency collaborations that we also want to consider during the first phase of implementation.
So we see that Governor Cardoso has described this, the payments infrastructure, as a strategic national asset. We know Nigeria is going for a $1 trillion economy. How do they meet? What's the contribution of the digital payments into this?
So, and just like I said now, the economy thrives on payment. Goods and services, economic activities is driven by payments. When commerce happens, payment has to be made. And to do that, you need to have a very formidable payment infrastructure. Today, everybody is doing digital payment. Huge transactions are happening in this country. Only last year, we recorded that the transaction volume that we have actually conducted through instant payment, I mean direct to direct, person-to-person transfer, had hit 1 quadrillion. So the transaction volume has grown, and that is powering the economy, which leads to higher GDP. If you don't have a formidable and reliable payment system, activities will dwindle. In addition to that, providing these rails and bringing more technology advancement into the financial services has created more opportunities for Nigeria. People are paying online, people are selling online, more companies are being licensed, and more individuals are being provided opportunity through the agent banking services that we introduced. So basically, the payment system and the financial services is powering our quest to achieve the $1 trillion economy by 2030.
And I'm glad you talked about cross-border and international, but AFCFTA is one unique opportunity for the continent, the opportunities it brings, but it does seem that we have not been able to maximize it here. So how will this PSV improve seamless payment, beginning from within the continent?
So just like I mentioned, we are collaborating with other African countries through the cross-border arrangement. We're working with Afrexim Bank and the Pan-African Payment Settlement System that has provided a Pan-African infrastructure. Today, African countries are connected together through a payment system where we can trade and do businesses using our local currencies. This is a huge one for us because you don't need to source for the scarce FX to do your business. I can pay with my Naira to a good, to service that is being provided to me in Kenya, and someone in Kenya can also pay with Kenyan shillings to pay someone in Ghana who is providing services. If we are able to do this, not only are we boosting the African economy, we are also presenting Nigeria and the whole of Africa to the global world, thereby fortifying our economy and making us more independent and resilient. This is what we have done in Nigeria by ensuring that banks, I think about 20 banks in Nigeria have already been connected to this platform to enable Nigerians and customers of the bank to do intercontinental trade with other African states without having to source for scarce FX resources. So we are connected and we are promoting more to join. We also have connected our fintechs who are also providing the payments app and rail to enable them trade with other African countries. Nigeria is sitting on the board of PAPS and would ensure that whatever we need to do to become more relevant and more helpful to our citizens, we do that.
Yeah, PAPS is really an interesting one, which we hope that it will solve a lot of challenges in that payment line. But there's also the risk of cybersecurity and fraud. What does the system have to deal with this, at least to reduce it to a considerable number?
So consumer education is very important. As much as we are building infrastructure and providing firewalls around our investments, we also need to educate the consumers. Technology will focus on that and make sure that the banks and the fintechs provide adequate technology, adequate know-how to ensure that people are not defrauded. But there are other aspects that depends on the individuals, which is impersonation. You have a situation in this country today where people can send you a text message and pretend that it's from your bank and ask you to surrender your bank credentials. And they in turn use that to defraud you. Such consumer education is being pushed, and we have a committee that will look at the proper, adequate education that they need to put to the nooks and crannies of this country. We're targeting specific people in the community that really needs to be educated. And so there is a work group that will focus on that education. Why we tackle from technology perspective how to protect our banking system, how to protect our payment infrastructure so that we don't have hackers coming in to disrupt the existing arrangement. So there's a work group that is specially designed for cybersecurity and risk management to take care of this.
All right, it's interesting, sir, that, this is being done at least on an African scale. Because we've been talking about the potential that the continent has for a bit, and I believe with conversations like this and Nigeria's active role in PAPS and AFCFTA, we would do a whole lot better. Thank you so much for coming on the program today, Mr. Musa Jimoh, the Director, Payment System Policy Department at the Central Bank of Nigeria.
Thank you very much.
All right, now it's time to go global with Anite Edet.
All right, so it's midweek, and we're still taking a look at the global markets, and starting first with U.S. markets, where we saw that U.S. stock futures were little changed early today after the three major averages closed at fresh records. Particularly the S&P 500, which rose about 0.13% to end above 7,600 for the very first time in Tuesday's trading session. Now, futures for S&P 500 futures and the NASDAQ 100 traded in the flat line, while futures tied to the Dow Jones Industrial Average added about 17 points or less than 0.1%. Our Washington correspondent Maria Bird has details of Tuesday's trading activities on Wall Street.
U.S. corporate chip makers were the highlight of the U.S. stock market on Tuesday, as the S&P 500 saw record closes, as it closes 0.13% on Tuesday, and the Dow Jones closes 0.45%, leading the day, as the NASDAQ just inched above flatline at 0.03%, as many investors are watching to see how the Middle East conflict could have an impact on the U.S. stock market, but the AI industry continues to keep it strong, as many investors are also watching to see how the next few days will pan out and if the U.S. economy will show positive signs to keep the market on an upward swing.
As our Washington correspondent Maria Bird giving us an overview of Tuesday's trading activities on Wall Street. Now, she mentioned the U.S. and Iran war, and that conflict between the two countries is continuing to take its toll on the global energy market, particularly in the United States. Now, in an interview with Channels Television, an economist and research fellow at Cornerstone University in Michigan, Jeffrey Degner, spoke on the impact that the instability of the conflict with Iran is having on the financial markets and financial stability for American families.
Secretary Rubio hinted at some progress in negotiations with Iran. And so I think for peace-loving people everywhere that resolution is what everyone is looking for, but certainly markets are looking for some certainty in the future. And I think one of the places to take a look at first are bond markets and how bond markets respond to anticipated inflation in the medium term. And we see that coming through in this pressure on the 10-year U.S. Treasury note approaching around 5%. And that is an indicator that the bond markets believe that the current price inflation we're seeing due to the shock in Hormuz is not a transient sort of phenomenon, that this could be here to stay for a while. And I don't mean to be the pessimist, but there are some analysts who are predicting that if the conflict does not get resolved and if oil reserves, strategic reserves continue to diminish, we could be seeing barrels of oil north of $140, $150. That would mean serious pain at the pump for your average U.S. consumer, where gasoline could vault by as much as $1.75 in addition to where it's at now. And diesel would be even worse if it reached those levels, adding about $2.50 per gallon, which, of course, diesel is really the lifeblood of delivering goods to the American marketplace. And so, again, we need to see this conflict come to a resolution and these energy supply chains start to open up again in order for households and firms throughout the country to see some relief.
So now that Professor Degner was talking about the impact of the Iran war on U.S. economy. Now, still talking about the U.S. U.S. President Donald Trump's administration has proposed imposing an additional duties on imports from about 60 economies after determining that their futures to curb trade in goods made with forced labor are unreasonable and restrict U.S. commerce. Now, the USTR said on Tuesday that it would impose 10% duties on related to forced labor investigations on imports from Canada, Ecuador, the European Union, Indonesia, Mexico, Pakistan, Argentina, Bangladesh, Cambodia, El Salvador, Guatemala, Indonesia, Malaysia, Taiwan, and Britain. And at the same time, the trade agency says it would impose additional duties of 12.5% on the remaining 45 countries that it investigated. Now, the proposal from the U.S. Trade Office is the latest finding from a Section 301 Unfair Trade Practices investigation to be released as the Trump administration seeks to rebuild its emergency tariffs, which was struck down by a U.S. Supreme Court decision in February. Now let's talk about Canada, which has formally requested a renewal of the North American Free Trade Agreement with the U.S. and Mexico, called the USMCA. This comes as the July deadline to renegotiate the pact looms. In a notice posted on Tuesday, late Tuesday, Canada-U.S. Trade Minister Dominic LeBlanc requested that the deal be renewed for another 16 years, calling the agreement highly beneficial to all three countries. In a notice letter, LeBlanc argued that the USMCA, known as COSMA in Canada, gives North American countries a competitive global advantage. He added that Canada recognizes that there are areas that the pact can be improved, and that his country is willing to consider any proposal that can be beneficial to all three nations' long-term prosperity. Now, the request comes as LeBlanc makes a visit to the U.S. to meet country's trade representative Jamieson Greer in Washington. So that's global news for Wednesday. I'll see you tomorrow, Thursday.
Thank you so much, Anita. And just before we go, let's head to the market. Well, they normally would say sell in May and go away. I don't know if that's for June, because it seems that's what we're seeing at the NGX. This morning, the market is down 0.82%. A lot of profit taking going on, and we've dropped to 244,652 as at this morning. And those most affected are Sterling Bank, MTN Nigeria receiving a lot of profit taking. Geregu, as usual. Okomu Oil also down. Total Nigeria. They are the ones feeling this pinch most at this time. We'll see what the numbers would look like at about 1:30 when we'll be here for Business Incorporated. I'm John Mekwan. I'll talk to you then.